all for being here. We've had a pretty interesting group discussion, a little pre-discussion here, and one of the things that's come out of this that I learned in that pre-discussion was just sort of the breadth and depth of when we talk about alternative fuels. Okay, when we talk about the breadth and depth of alternative fuels, it's not necessarily fuels itself. We need to be looking at the whole system. And what I want to put out there for the group as an opening question is, okay, you sure? Is this for the karaoke machine? What I want to put out there for the group is...
no karaoke, please.
When the investment community looks at this topic, what do they get right and what do they get wrong? Neil, I'm going to start with you for the A's.
Sure. First of all, let me just start off thanking Eyal and his office and the government and all the sponsors. It's a terrific opportunity to be here and to talk about this very important initiative. You know, I'll start off with telling a story. I run a private equity firm that's been around since about 2007, late 2007. We've seen in the fuels and the transport area, including solid fuel, batteries, et cetera, we've seen about 350 to 400 investment opportunities over the past 6 or 7 years in this sector alone. And we've gotten most of them right because we stayed away from most things. But if you can make an error by omission here, we got Tesla wrong. I saw Tesla 3 times. I saw Fisker, I think, twice. And we saw Better Place a couple of times as well. And it was a struggle. The team ranked ordered those 3 investments by putting Fisker first. I'm not sure that how many of you remember Fisker, but he was actually a very celebrated car designer. Tesla we put as second because we were afraid of range anxiety, and I only got a chance to drive the Roadster, not the Model S. I didn't drive a Model S until I was looking for a car, and I'm probably going to buy one. And then we looked at Better Place. And so we loved Fisker because it was a plug-in hybrid, and it was a lot sexier than the Roadster. And so, you know, we were all big fans. We were basically pumped by the car, by the product, and we were not that crazy about Tesla, and we thought it wasn't going to make it. And it almost did, by the way. Elon would tell you the story. Well, we got that wrong, obviously, here. But the mistakes that you make that you don't invest in are not the ones that will kill you. It's the mistakes that you do make. And a lot of investors over the past 5 years in this sector have made massive mistakes. I would say tens of billions of dollars actually have been spent on the sector by private capital and very little to show for it. And so we need to talk about that today and understand the investor's perspective in what is going to make this a really exciting place to invest over the next decade. And I thank you again. This is a very important conference to discuss that.
So Al, you're both a consultant and an investor.
Yes.
You want to build on that?
Well, first, again, thank you to Bloomberg. Thank you to the government of Israel. I think he's doing a terrific job in promoting biofuels. My name is Al Costa. We do consulting for banks and investors. We basically tell them what's what, who's doing what, etc. My understanding about this market that it lacks, it's an understanding on exactly what we are trying to accomplish. We filter out a lot of investments that come to us because on a simple question, I asked this guy, okay, what's your mission? I am here to replace oil. Everyone tells me, which is very nice, etc., very user-friendly. However, when I ask, okay, who was Standard Oil? Like, I'm not sure. Well, it so happens that Standard Oil is a company that started the oil industry. Chevron, Esso, Exxon, all those big guys come from Standard Oil. So how can you honestly want to replace something that you do not understand? We have plenty of technology. We have plenty of techies. We have plenty of guys that know the business on a technical side of view, but they do not really understand the who is the, for example, the customer here. The customer is not a person. The customer is a machine. You cannot run a diesel engine on gasoline. That doesn't seem to be understood many times. So my first question for any, for any guy who wants money for his project is, what's your understanding about this industry? You may be a PhD on whatever, But if you do not know exactly how to turn all the technology into a practical business and who is your customer, how you make that customer consume your product, it doesn't matter really.
Okay, thank you. Jack, you're in a sort of a unique position. You're here in Israel. You're doing clean tech, VC work. What's your perspective?
I don't know if I want to be as open about my personal rights and wrongs as Neil is, but maybe I'll come to that a little bit later. I think that as a community, the clean tech venture capital community probably underestimated the difficulty about making venture capital quality returns when you're ultimately dealing with commodity markets. I think in a sentence, that's what we're all saying right now. That was our mistake. We, venture capitalists, I think, love huge markets, okay? So we all got excited in clean tech talking, well, we're attacking the biggest markets in the world, water, energy, other industrial markets. So big market, check. Innovative technologies, well, when we all sort of started looking at these things in the mid-2000s, there was a host of innovative technologies in academia, in some in large companies as well that was available for external licensing. You got a flood of people interested in the area. So I think innovative technologies with deep IP around them that potentially could give you long-term differentiation, check. High margins, that's maybe where we sort of failed. I think so how do you, now there was a big spike, there was a belief that, in the price of fossil fuels, there was a belief that gives us room to sort of play with. Obviously, since then, you've had a significant amount of fossil fuels coming back online, right, with the shale gas and oil. But regardless even of I think that ultimately the scale of the investment that you need to get to a viable product to serve such a massive industry and the differentiation in what's ultimately commodity-related pricing, that's where I think we got wrong. That doesn't, maybe in a second time around, we can talk about how we're now trying to think about attacking that. But that's what we got wrong.
Okay, great. Abraham, you're from the Chief Scientist's Office here in Israel, a unique position. You effectively, in terms of the investor, you represent the public as the investor. What's different? What are we missing? What's the investor getting? What are they not getting?
Let me give a short introduction. The Office of the Chief Scientist was started at about '84 with a R&D law in Israel that support any Israeli company that is doing innovative work. So it can be a startup with one person, and it could be a big company that wants to develop a disruptive technology. And energy, probably anything related to energy and replacing oil is definitely going to be part of it, a major part. We know that, as said, innovation is critical here, nanotechnology, everything, because you have to fight against a very low and cheap commodity that is well entrenched. And so our mission is actually to promote innovation and R&D, and the way we do it reflects what was said here before. We share the risk. So, VCs supposed to be risk-loving, but sometimes not so much, and we help them to get into risky business by sharing the risk with them. That's the main way that we help industry, and of course this sector of alternative fuel has a lot of risk in it, and so we are part of it. And in addition to our regular programs, which if I have time I will discuss some of them, we have some specific programs aimed at the alternative that we work with Eyal to start, and they're not utilized as we would like them to be. For example, one of them is matching funds. If someone is investing in a company that is doing work, R&D in alternative fuel, then each dollar or each shekel that is invested in this Israeli company, we will match the investment by half. So if someone is putting 10 million shekels in a company, we will invest in additionally 5 million shekel into this company as a long-term loan that if the company succeed, have to be returned, but if it doesn't, then it just dissolves. So this kind of programs are there for the community to use, and unfortunately, they're not used enough at this point in Israel.
Great, thank you. Joss, I think you might be the longest tenured veteran here, 25 years in this business?
28 actually, but coming from mainland Europe, I also would like to thank Bloomberg and congratulate Bloomberg for putting, in the Prime Minister's office, for putting this conference together. I think it's a timely conference. It's very interesting. I've seen really some breakthrough companies here, and I'm glad that you didn't invite all my competitors from Europe. So with that, I think talking about the perception, I mean, Jack mentioned mistake, I would rather talk about a misconception. I mean, the clean tech industry for venture capital really started in the mid-2000, 2005, 2006, when most of the VCs were still trying to recover from the implosion of the dot-com bubble. And so many of the players that came to the clean tech sector came actually out of the ICT sector. Now, with the exception of the smart grid or some things around mobility, most of the plays in the clean tech sector are very different from ICT. They are more engineering or new process type investments. So they have much more similarity to the biotech sector than to the ICT sector. And I think that is something that was very badly understood, particularly in Silicon Valley. So in clean tech, when you have an engineering project, when you develop a new molecule or a new process, you can't expect to have a return in 3 to 5 years. It takes 7, 8, 9, 10 years. It takes going from a proven laboratory to a pilot, to a semi-industrial plant, and to maybe a demonstration at full scale before mainstream chemical or materials companies start to pick it up. So this is a different time scale. This is a different amount of money that is needed than what you need in ICT investments. Having said that, I think it can be done. I don't think we made mistakes. Yes, we made investments that didn't succeed, but that was because the technology didn't work or the market wasn't there in the end. But having said that, I do believe that those that persevered in this process of building companies that really can make a difference, that can really address global markets, global needs, they will be very successful. It will have taken a little bit longer, and it will have taken much more money than was anticipated initially. But maybe I'll leave it there, and we can come back to specifics afterwards.
Great, thanks. One thing that seems to have come out of the conversations I've had with each of you and a little bit of research is that scale may be more critical in these kinds of investments than in other types of technologies. Number one, is that a valid assumption? And two, what are the implications of that? Neil.
Yeah, I think it is for the most part, but not entirely. So let me try to break it down for the audience. When we talk about alternative fuels and fuel choice, we can divide it very simply into liquids and solids. Solids are basically the fuel cell vehicles, plug-in hybrids, and battery electric vehicles for the most part. And compressed natural gas is somewhere in the middle, and then you've got all of your liquid fuels. Outside of the solid side, it's all commodities. It's all about commodities. You're basically trying to do what the Prime Minister spoke about last night, to replace oil. Whether that is, it is certainly a very ambitious goal. It is a goal that governments need to set in order to stimulate activity. I think it's a very worthy goal. But how easy is that to happen? Oil is a commodity. It has gotten there over the course of 150 years, as Alice has spoken about, since 1857, and we're still at it. And so in order to compete with commodity, you need to be able to build a better infrastructure. The Seven Sisters, of what Al was talking about, were basically big integrated companies that mastered logistics. They are behemoths today. In order to compete with them, you need to compete with them on price or on cost. On price, the only way you can get is if the government gives you a cost, because generally consumers will not pay a green premium for biofuels. They will do it for all the other products, including electric vehicles. When you're talking about electric vehicles, I'm interested in buying a Tesla Model S. Whether I'll buy it or not We'll see, but it's going to be more expensive than the combustion engine competitors that I'm looking at, and I'll buy it because I want it. Yes, consumers want biofuels, they want sustainability, they want this concept of getting off of oil, but they also want to go 350 miles on a tank of gas. You can't do that on all ethanol. They don't really see the fuel. It goes straight from the guy who's at the gas station right into your car, and it doesn't make a statement. It is a commodity, and for commodity, you need scale. So the problem, we are going to have fuel choice. The problem is that with choice, we weaken ourselves as competitors to the built-up petro infrastructure that is extremely large and extremely well managed after 150 years of practice. It's going to be very hard to do that, but I think we can, and we need governments to set price signals in order for that to happen.
So if I understand you, we're effectively trying to build scale. We're trying to build scale. At the same time, we're fighting scale.
That's right.
Fighting existence.
We've decided to let the market decide because governments are not good at picking winners and losers. So we're going to have multiple choice for consumers. That will be the ideal world. But in multiple choice, you get a problem, which is that you're going to have to develop infrastructure. Imagine, I drive every day to work on a highway, and I have this mammoth gas station that's there, and it's got 40 different pumps. But they're all either diesel or regular gasoline. How are we going to have an infrastructure for hydrogen, a battery swapping station, compressed natural gas refueling stations, E85 pumps, et cetera? Building all that up at the same time sounds a bit challenging. And so as an investor, I'm loath to invest in that. I want to invest in the product. I want the government either to make that investment or to send a very clear price signal that multiple choice is the order of the day, and that will be rewarded. I think it is the right choice because I think that if venture capitalists and private equity are pretty good at picking winners and losers, can't get that one right, I think governments are going to have a hard time too. This is probably a 20-year game. You're going to need to play it out on the field and accept the fact that you will have logistical weakness through the multiple choice for the next several years until winners emerge in the marketplace and not through fiat.
Great. Jack?
Well, yeah, so I think, first of all, just one thing I want to say about governments, right? The sad failure of all governments throughout the period that I've been focused in this, 7, 8, 9 years, is that governments have failed to price in the externality. And that's what government's job really is, right? That's what I learned in economics from Martin Feldstein, who was Ronald Reagan's economist, okay? So he wasn't that interested in governmental regulation, okay? But when there's an externality, whether it's emissions and the healthcare costs of emissions, or whether it's greenhouse gases, governments have simply failed to convince their people. The top scientists in the world are pretty convinced, but governments have failed to convince their people, or people have failed to convince their governments, one way or the other, that the pricing in that externality for fossil fuels is something that we should all do as a society. There's obviously an immediate need for that. Because if we were going to be able to do that, obviously it makes all of the alternatives much more economically attractive to investors. That's one point I wanted to say about governments. I mean, I always used to say, as an investor in Better Place over here, we should talk about the asthma cases in Tel Aviv, because that's what significant electric vehicle penetration can help solve. And we heard the statistic from Brazil a couple of times in this conference. I think it was 26% emissions reductions very, very quickly. So that's one point. The second point, though, about scale is that absolutely, I mean, the investments that were made by venture capitalists in this area in, just throw out some of the names, whether it is Gevo, Solazyme, which is one that's still looking reasonably okay in the public markets, Pior, which has basically been taken back by its venture investor within the public markets, Cobalt, I mean, the whole host of them, they are all making, I just read a report, they're all making slow and steady progress, okay? So slow and steady progress means that maybe they've gotten to their first pre-commercial scale pilot plant. Well, lo and behold, of course, things aren't going to work in that. And that means that investors are already 100, 200, several $100 million into it. The public markets kind of bought these shares at an early stage. They've gotten burned. That's not a good situation. How do we learn from that? How do we go ahead and move forward again? And let's not, by the way, even forget that the one big success that has happened from investors' perspective, Tesla would be dead if it weren't for $1 billion government loan guarantee from the Obama administration. So there's a lot of capital that's needed to get to this scale, and it's happening slowly. And I think that the last point is that the large companies on the other end, they're not gobbling up things at a technology stage. They're waiting until some of these scale challenges are solved before they really get more active. Not all of them, by the way. There are some, like Poet that was here earlier today, that are actually getting involved. That can
So
help.
we're on stage here. Do you guys serve as the Greek chorus?
Well, I was just saying, I think it's important to know that Tesla's repaid that loan to the,
Yeah,
to the
repaid
government
it,
now.
correct.
And I think you inadvertently revealed that you invested in better places.
I did. Not inadvertently. It's,
Inadvertently revealed that you invested in better
I knew that.
Deal
and
just
I was
started.
putting it.
But since we're talking about, I mean, Neil, you mentioned that you missed the opportunity to invest in Tesla. I was just checking out the share price there. Shares are up more than fourfold this year, despite a little bit of a correction. Price to earnings ratio of something like 260. Would you invest in it now other than buying a car?
No, actually, I was quoted a long time ago as saying go long the car and short the stock. So, today, rather than being long, actually, I believe that Elon made a public statement a week or two ago, saying that he doesn't like the valuations too high, allegedly because he wants to buy more shares. But the price is extraordinarily high. It reflects enthusiasm about Tesla and also about the sector. There aren't that many investable names in this space right now in the public square that are actually doing well and are hitting their numbers. So Tesla is, and it becomes the apple of the institutional investor's eye, is bidding up the price. It's definitely not sustainable. They can't grow into the multiple. It's unrealistic. It will come down, but the company hopefully will do well. It has many challenges ahead of it, but hopefully this company will do well. We're all rooting for it. And interestingly enough, by the way, an aside, several of the venture investors in Tesla did not do all that well because in the process of growing to the point where they could go public, they had to do difficult rounds at a time where some of the early investors were crushed. Some did very well, those that kept investing, some didn't. So even investing at the IPO looks brilliant in retrospect. Even if you had invested and we had invested at an earlier stage, who knows whether we would have made those lavish returns. Investing in companies that require an enormous amount of capital is risky business. It's a contact sport. It's not for the timid. And the guys, more people made money, of course, in Tesla than lost. But anyone who bought in at $180 or $200 a share definitely has lost money today.
One thing that I'd like to point out is that since we're mentioning Tesla is, I've been claiming for many years that in this market, in biofuel market, and I talked to guys at Unica, I talked to the guys at Growth Energy, to just about everyone. It's like, you guys have no idea how to sell. You guys are very poor salespeople, and I like to make that as honest as possible. And why do I join that with Tesla? Because I always thought...
Let me just clarify. Sell their product or sell their company?
No,
Sell the idea of their company.
No, sell their product, the end product, the biofuel. You see, if you don't have scalability, if you have just a little couple of liters to sell, either you try to have scalability or you get those 2 liters and you make sure that those 2 liters are sold for a very interesting reason. Tesla started as a company that had a very few cars, but they were really high-tech, they were really desirable, they were really something that you would pay a lot of money for. Maybe, I'm not even getting into if it's worth or not, it's just that it's something desirable, something that you would want to pay for. At the end, you get customers for your couple of liters or cars or whatever, you pay your bills, and then you build another 4 cars or 4 liters or whatever using that money. And then you get another people who are buying your product not because it's cheaper, not because it's greener, but because it makes a statement about them. That's what an iPad model. I like iPhone. I like Apple a lot because Apple puts on a new product that is very expensive, that not everyone is able to buy it, but still people want to buy it because it makes a statement about themselves. And by doing that, Apple is able to resell the product, and all of a sudden, everyone has an iPhone, everyone, and you have the scalability there. But you don't do it the other way around. The problem is these people, many times, they they focus so much on having scalability that they do not sell those 2 liters they have, and at the end, they are not selling and they are not getting the scalability either. My point.
Okay. Joss?
Yeah, on scalability, I mean, to add to Neil's point, I think I'm on record at the conference on biofuels by making the statement that there's no weight or no point for venture capitalists to invest in biofuels. And was exactly the point about the commodity pricing. But what you can do, and what makes sense for venture capitalists, is to invest in the technologies or the new processes that lead potentially to biofuels, but by focusing first on much higher value-added products. So what we have been doing, and others, is to look at biomass and convert it in chemicals, high value-added chemicals, which allow you to capture more margin initially, to pay for your pilot plant, to pay for your first industrial production, to show that the process works at scale, because oil majors or chemical major companies, they don't want to take a technology or a scaling risk. So they want to see that the process works at scale. They're much better placed than to do the mass production and to produce it in commodities. But as a venture capitalist, you need to capture the value by focusing with those technologies that potentially can be used for biofuels on high value-added chemicals. And that, I think, is one of the ways to solve this problem about scaling and the commodities where you end up at the end of the day.
I think that's exactly what some of the successful companies are doing. You see Solazyme doing that and others. I just wanted to say to the Greek course over there, I challenge you also to find a better place customer who didn't love his or her car and the experience. And when you get that excitement, when you get that experience, there's margin there for the investors, right? So it's sort of like lots of mistakes were made by Better Place management and investors, sort of all along. But I think one of the actual tragedies is that when you think about do a thought experiment and sort of think to yourself, what would you pay for predictability of your fuel price for the next 10 years? You personally, if you could somehow magically have a stock of fuel that you were told today in Israel, what are we paying now, like 720, 730 shekel per liter? If somebody were to say, I'm going to give you an offer now, 9 shekel, and that's what you're going to pay for the next 10 years. Would you do that? I don't know. All of a sudden, you're thinking about it in a very, very different way. The interesting thing about the Israeli market is that a big part of the Israeli market is actually trained to think that way. Why? Because a lot of the vehicles are actually leased at a long term through the corporation. So you have these large companies, Teva, what have you, who manage fleets of 5,000 vehicles, 7,000. And they're all actually really incentivized to do one thing, which is hit their budget. Teva's a drug company. But this is a huge, even my small fund, which has 8, 9 vehicles, we're managing 8, 9 vehicles. It's a big, big part of our budget. So, and we pay the gas. So there's a premium that you'll pay for the predictability. The tragic aspect of it, which really I think suffered a lot of the adoption for Better Place, is that even though you got a lot of like 100, 200 fleets to sort of come on and say, yes, we're very interested in this, when push came to shove, there was a tax problem because there's a taxation that you as an individual have to pay for the usage of that car. And you were paying that tax for the full value of an electric vehicle, which is very high, even though Better Place was trying to come up with an offering where actually they own the battery. So anyway, but the excitement of the individual is a place where there's margin and there's a place where there could be satisfaction. And then the predictability of it is another place where, and these markets segment, right? So fleets is obviously an early adopter market where you can create a huge company at a smaller scale. There's also, you can solve some of the refueling challenges associated with that. And that's why I think some of the more interesting opportunities are fleet-oriented, bus-oriented, et cetera.
Great.
Can I chip in from the Greek course here? Question, really looking for the silver lining to some degree here, which is that historically we saw, as public equities in our sector were up, there was more interest. It was easier to raise money for venture funds. It was easier to deploy the capital. Not surprising, everybody sees the pot of gold at the end of the rainbow, the potential IPO of a company. The mention of Kior and some of those other biofuels companies that didn't raise that much money in the grand scheme of things and have had challenges. But now in the last year or so, we've seen public equity prices more or less double, at least according to our index, which is the NEX index of clean energy stocks. Is that making life any easier for you guys to raise money and to continue on in this space?
Yeah, you know, I think there was a study done by two professors from Babson and Harvard, Jeff Timmons and Bill Bygrave, that the only factor that over time influences the inflow of venture capital is the number of IPOs on NASDAQ. So the more the stock price, that is crucial. I mean, the fact that there is liquidity, because at the end of the day, investors are driven by two factors, fear or greed. So at the moment, they're probably fearful and they stay away from the market. But as soon as the market picks up and you get these IPOs and they do well, the first thought what these major investment funds have is, how can we be in these companies earlier? Because there is these venture capital guys that made already 5 times their money or 10 times their money before we got even to know about it. So how do you get there? Well, it's very simple. You invest in a venture fund. I mean, this has been the cycle. So if you have good stock markets, the inflow of money into the venture industry is much more easy. Of course, the best returns are made on venture capital when the inflow of capital is low, when there is shortage of money. So this is kind of a contradiction, but it's a reality that we have to live as venture capitalists to manage these cycles.
Let me take a swag at that. Next week, actually, is my investor conference, and I got an hour-long presentation devoted to that question. So it's a very interesting one. Public equities in our sector are actually doing quite well. They've bounced back. I don't think it's quite double, but it's quite remarkable. But yet IPO activity is almost non-existent, when 2013 has been the best year for IPOs outside of the clean tech sector since 2007. It has not come back. We only were able to identify 4 filed IPOs and 4 IPOs that happened in our sector this year. It's at a record low for the last 8 years. And so the question is, why are public equities doing that well? For the most part, it does reflect improved performance. It also reflects improved sentiment. But most of that seems to be held by institutional investors that are awash with liquidity. For the IPO investors, who are also the same groups of investors, I think that they're a little bit more gun-shy because of recent experience of IPOs that have underperformed.
Yeah, but here's the question: there's Zynga, and there's been Zynga, and there's been Facebook, and okay, and Twitter was the big one, but there's been plenty of dotcom crazy IPOs that have fizzled, and yet the market seems very forgiving of that, by evidence by this latest Twitter one. How come clean energy doesn't get cut some slack?
Apparently, and I'm not the guy. I don't want to get. It's a great question. I don't want to give Elon Musk too much credit, but he does deserve a lot of credit. If your name is not Elon Musk, your stocks generally are not doing as well. So it's now Tesla is down and SolarCity is down off of their peaks, but they performed remarkable, and he is. I give him a lot of credit for focus on quality. I am very familiar with both the Tesla and the SolarCity business models. When you see investment banks starting to push through IPOs into the sector, that will give you a signal that there is an appetite for risk. I do not think that the rise in equities that we've seen in our sector, which has been quite remarkable, in biofuels, by the way, it's way outperforming performance. In other words, the index is up something like 80% this year, and performance is only up about 15%. And so it's really driven by sentiment. So the sentiment, which is really centered around the recovery of the solar industry, and stocks have done very well there, and it is recovering, has spread. Energy smart technologies and biofuels are both doing well, the two sectors that we're talking about here today. But until you see risk appetite start returning, it's not going to happen, and we have not seen that. Another reason is that if you look at the $20 billion of venture capital that was raised for this space over the last 6 years, the dollar volume of returns over the last 7 years, cash back, has been very small, and it's trending, I understand, and I'm not sure who keeps this data, falling behind their brethren in information technology and in biotech. And so once that starts happening and investors start to see the cycle of capital coming back, I do think that risk appetite will return. So it's just starting to filter back, but I do not believe that it's going to be a torrent anytime soon, unfortunately.
I worked in the internet industry, so I lived through the dot-com era. Actually, I sold a company that ended up being sold to a NASDAQ company So all of a sudden I had NASDAQ shares. 3 months later, I had nothing. So I know that stuff. Anyways, so I can tell you, there's a big difference between an IPO of a biofuel company and an IPO of a typical dotcom. Dotcom is just bits and bytes. It's just the information flow, and that's basically it. In this other market, we are polluted, and I say polluted, and I insist that we are polluted by a lot of, and especially because my company is in Europe, and in Europe we are overly polluted with all this talk about ILUC, food versus fuel, deforestation, et cetera, that at the end makes the product more difficult to sell, because it's not only that it may be cheaper, et cetera, but if the customer thinks that by buying your product, it's helping the famine in Africa, he will think twice. And that especially is clear with investors. Investors, they don't like to invest in stuff that can somehow bring some kind of talk, et cetera. And I know because one of the investments I had in the dot-com era had to do with music online. And I had these guys who were going to invest $1 million in me, and the next day Napster went down, and the very next day I had zero investment. So I lived through that. And unfortunately, we have that component in this market that brings a lot of pressure and brings down a lot of people that otherwise would be interested in investing.
I agree. I think we're at a moment still now of irrational pessimism, right? I think that we had moments of irrational exuberance, and now I think that, I've spoken to some of the folks at the Wall Street banks. They're saying that their institutional clients are looking for growth stories because there's a lot in the markets overall. There's just a lot of growth that's already priced in. So I think that we'll start to see things change a little bit, but it is really remarkable sort of how sentiment-driven the ability of venture capitalists to fill the pipeline to the entrepreneurs is, right? Because just at the time when things are at a peak, you can raise a ton of money. It's probably the wrong time to be investing it. That's when you have the money. You have 5 years to invest it. Yeah. There's a structural problem. But I want to bring it back to one of the sponsors of our conference, or to the Prime Minister's office. I think that governments have to think about this entirely differently. They're not. They have to think about. Again, the aspects which aren't getting pushed in. By the way, the internet, I mean, one of the things, the government stayed back. To this date, the governments have decided, well, we don't have to have sales taxes on internet commerce. I mean, imagine if they had. If they would have put that in, and I was involved also back then, and imagine there were lots of people that were afraid. Maybe it would have killed all sorts of problems. Maybe ultimately there was better economic stimulus by letting these companies to grow and to bring cheaper prices ultimately to consumers. I think that in these areas, government has to show leadership, not because I, as a venture capitalist, am going to benefit from it. They have to show leadership because my children require that leadership. And we all remember that famous John Doerr speech to the Kleiner Perkins venture capitalists. He spoke about this and started to cry. Well, maybe he's crying now because of the returns they saw. He was crying at that time for the right reason. If we don't find, and I'm not even talking about the geopolitical security aspects of this, I'm talking about and again, I'm not a scientist, but it seems that 98% of our scientists agree that we have a problem with greenhouse gas emissions. If we don't solve the fossil fuel challenge, then it's our children that are going to be crying, and we cannot afford to keep that problem, and we have to think much, much longer term than even a 10-year fund, which I can extend for a couple of years if I want.
I'd like to give a statement also to the government of Israel from a European point of view. When Brazil started the ethanol program in 1975, and I know because I'm also Brazilian, you can tell by my accent, we never called it ethanol. We never called it bioethanol. We just called it exactly what it is, alcohol. The name bioethanol is a misnomer. It doesn't have to be that complicated. It's just alcohol. It's the exact same thing that you drink in your beer. The problem is we put this bio in front, and we created an aura of mysticism it scares people away, that makes something that is so easily understood into something overly complicated, and at the end, the customer doesn't exactly know why it's bio or something like that. So to the government of Israel. Keep in mind that it is very important to save the planet, et cetera, but don't go like Europe goes, that it puts the bio thing so strongly that at the end you don't have a model because you go into new food versus fuel, bio, blah, 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 and you never get out of that place.
The panel was about options on fuel, and I think to add to Jack's point about the planet, I think Mr. Wang from BYD this morning clearly made this point. I mean, 65% of oil is used for transportation in China. If the market, and the market is huge there for automobiles, I mean, every single family there also wants to have transportation. This is not sustainable, even if you find better fuels. I mean, so the electric car is something we didn't discuss here much at this panel, but I think it's there to come. And what I learned on this conference, actually, the last presentation before lunch, I mean, one of the biggest problems with electric cars today has been the range. People are afraid that they leave their home in the morning and can't get back because the battery reading is unreliable. With the solution that clean energy is bringing, this problem could be solved. So I think there is here a real breakthrough technology that could change the economics and the user acceptance for electric cars. And I'm very excited to see that here at this conference.
We're out of time. Can I ask one of you to take the last word when you want to leave people walking out of here with thinking about as far as investments in this sector? Quick one.
Proceed with caution. How about that? But proceed.
Okay. Yeah. Very good.
Make a comparison with the oil industry. When the oil industry started, they actually dumped gasoline into the river because they didn't know what to do with it. We are moving into a biomaterial model in which ethanol can be used as a fuel and also as a source of bioplastics. At the end, within 10 years, we will not be using it as a biofuel. It will be as a source of plastic. So move from a biofuel into a biomaterial mindset.
Thank you all. Appreciate your time. Thank you all.